Hey,
Hey Jamil, what's up, man? How you doing? How are things up in Anderson?
all good, man. It's all good. Um, Excited. We're almost done with this class. Um, and what about you?
Oh man, it's good. It's honestly it's kind of wild down here in Bolivar. You know, this whole DBA week is just so laid back. I am a little tired, to be honest with you. Jimmy and I were up. We were playing Call of Duty on the PS5 last night, so we were up till probably like 2 or 3. But it was all good. Uh, I got up, had a good. I went for a jog this morning, and then I met Anika. We went out and got some coffee and just kind of hung out, sort of chatted. Uh, then I had some time to hang out, and Shelby actually called me with a tax question that really I kind of helped her through. It's been laid back. I know Tony was up there playing golf with her fiance. So that was fun. Stoner shot a 92 and Tony shot a 150. So that was fun. Really, the only real stress is working with Rebecca. Uh, she lets me take bathroom breaks sometimes, but she insists that I don't wash my hands to save time, so that I'm back on camera and back on.
Oh, watch out, man. COVID.
Yeah, it's
You gotta
tough, but
watch
it's
your
going
hands.
good. Thanks for asking.
Okay, that's good. Let's
Yeah.
get started, man. Today this is Jamil and Ryder, and today we'll be talking about Robinhood and ethics. Um, we're gonna give a little bit of what we're gonna be talking about today. We're gonna start with an introduction, saying what is Robinhood app, how does it work, a little bit of background about it. Then we're gonna do some observation about what happened since it started. That until this point, there's a couple arguments and dilemmas that happen throughout their growing process that we're gonna discuss. We're gonna understand those, go into deep with one of them, and then we're gonna kind of try to analyze a decision where we think what happened and what was the right thing and take an action from there. So get ready. There's a surprise halfway through the video, so please watch it until the end.
Okay. Oh, that's good. I like surprises, Jamil. I do. I really do. So let's kick out here. I know that some of you have probably heard of Robinhood, and they've been in the news quite a bit, and especially in the fourth quarter there of 2020, things were getting crazy, and they're at the beginning of 2021, and we'll go through and explain how there was just this crazy sort of culmination, a perfect storm of all sorts of just really crazy events that kind of culminated in one really kind of big disaster for some, and really a really profitable time for others. So just coming out here, looking at what Robinhood even is and how it works. Well, Robinhood's this app, and what they advertise is commission-free trades, which in years past wasn't really something that I remember E-Trade doing. They came out probably late 90s. They were doing trades for like $10, and that was people were late 90s, early 2000s. People were getting on E-Trade and doing this trading for $10, and that was kind of the beginning sort of the day trader kind of mentality and people getting involved. But Robinhood took it a step further, and they said, we're going to do these free trades with, you meet certain requirements, you get to trade as much as you want. So just kind of as some background, and what they wanted to do by that, their mission is kind of to democratize investing, is what they called it. So they wanted to give power to the people. It's a real populist thing, and that theme is going to really come out in this presentation, I hope. And really they're enjoyed by millennials, Gen Zers. So for some specific background, we went to searching on some scholarly journals, and it really has been written about the recent arrival of investing platforms with zero trading commissions and no account minimums has ushered in a new era of stock market participation, honestly. Robinhood reported 3 million new account users in the first quarter of 2020 alone. So it's becoming very popular. And then you had the pandemic shutdown, and that put a lot of other activities on hold. So you had retail investors. Now they routinely account for roughly 20% of stock market activity. So that was Fitzgerald and Wink who had written that. And then according to Eaton in 2021, the online retail brokerage company Robinhood, which was founded in 2013, was based on a business plan to make it easier and cheaper for small investors to participate in the stock and options market. Be very important later on. Robinhood never charged brokerage fees, as I said, and they allowed their clients to buy and sell single and even fractional shares of stock. So it appealed to customers with many other small technological innovations, such as friendly mobile first user interface. Robinhood, their business model is not, they earn money through margin fees, cash balance interest, payment for order flow, some of these other things, but not on commissions, as we said. So as of mid-2020, Robinhood had attracted this kind of clientele, 13 million investors, and mostly believed to be small, young, computer savvy, kind of novice investors. Important to remember. So in September of 2020, the Wall Street Journal said that according to Robinhood, first-time investors accounted for 1.5 million of its 3 million funded accounts. Okay, so half of their investors had no investing experience. Okay, that's going to be important. So, and that was the first month of 2020. The website brokeragereview.com estimated the average account size at Robinhood was only $2,000. So, but then by August of 2020, Robinhood itself had raised another $200 million of fresh capital. Their valuation was up to as high as 11.2 billion. And it's funny that it is considered this disruptive force in US investing. So there's plenty of opportunity to poke fun at Robinhood investors. They're novices. They are, first time kind of investors. Some of the things that is kind of interesting, they don't tend to look as much at the metrics of what makes a stock valuable, but they kind of go on what are their personal interests. Okay, Ford, but not GM. All right, they would invest in Facebook in 2018, but not in 2020. Airline stocks in 2020. You can imagine you've got all these people buying airline stocks in 2020. Not a good time to buy airline stocks, but yet the Robinhood investors did this, but they didn't in 2018. AMD, Snapchat, and cannabis stocks were particularly popular. All right, so these kind of things that Robinhood investors would have been personally interested in, they're making their investment choices reflective of that. So one last interesting note on that Aurora Cannabis, which was a stock, okay, of legal marijuana dispensary stock, it was briefly their most widely held stock on Robinhood. So if that gives you a picture into what these investors are thinking, they had 244,532 investors, and Apple was behind them. Okay, Apple was behind this cannabis stock. So they kind of play the role in the active trading, but steady state of demand for cannabis and otherwise obscure stocks. It's just kind of a funny thing. So, they're actually in the news again, getting ready to sort of pivot their business or add to their business model. Thursday, which is actually tomorrow, they're going to unveil a new sort of part of their platform that's going to be where people can get on IPOs, initial public offerings. So those are usually reserved for like wealthy investors and things like this. So when we are moving into this kind of observation phase, okay, this white and green screen, just a quick bit of history that I'm going to cover a couple more things and then let Jamil take over. But here we are with you can see this screen, got a meme up there. We've got a little news kind of headline there. So a couple of reasons that they were in the news. All right, gambling is one of these things. So the lack of sports betting. Well, yeah, I won't move our faces are in the way of it, but the sports weren't played in 2020. So the lack of gambling, they said, people maybe not gambling on sports, we're going to gamble on stocks. Okay. So in an interview on NASDAQ.com, Matt Frankel, who's with Motley Fool Money, who's a really popular podcast on investments and things like this. So he said that Frankel said that he attributed their popularity in 2020 to its gambling qualities. Robinhood turns investing into a casino and was their biggest driver of success. He would go even so far as to say in 2020, when there were no casinos, there were no sports to bet on, so they became the #1 casino. All right. So the #1 Reddit thread on investing is called Wall Street Bets, which we'll come back to. And so you can't tell me investing has not been gamified. That's what he said. And then the other issue was before I throw it over to Jamil here that I want to mention is these tax bills. So there was a guy, he's 30 years old. He's working full-time as an insurance agent. Okay, a lady from Morningstar invested on this. He's worried. He calls his tax advisor and he says, listen, I opened a Robinhood account in 2020 with $30,000, okay? Which they allowed him to triple through margin to $90,000 available in trading, okay, in day trading. So throughout the year, this guy, Derek, completed 10 to 50 trades per day, okay, roughly $200,000 to $2 million per week in trading volume, okay, in working 3 or 4 days a week. This is an individual investor, $2 million. So they said that in 2020, okay, get a load of this, he transacted $45 million in trades, okay? He traded so much with these free trades, there's $45 million worth of trades. So he gets to the end of the tax year, putting it in his TurboTax, puts in his 1040EZ, puts in his 1099B from this Robinhood Investments to report his income, and finds out that he has a capital gains tax, okay? He had made a net profit of $45,000 through Robinhood, but he finds that he has a capital gains tax of $800,000 because he had $100.4 million in capital gains. But because there's something called the wash sale rule, which sort of goes out the window for using Robinhood, it is you can't claim a loss unless you purchase this, if you purchase the same or similar securities without waiting 30 days. So you have to pay these capital gains if you don't wait 30 days. Well, he wasn't waiting 30 days. He wasn't even waiting 30 minutes. He was just trading these things so fast. So anyway, he ends up with an $800,000 tax bill. Other people have reported these same things. And it's just, so part of the problem here is that Robinhood's giving people access to this tool without giving them instructions or warnings on what to do. And it's like we say here in Southwest Missouri, don't give a baby 2 chainsaws when they're only trained on a leaf blower. You know what I'm saying, Jamil?
I really do. That was a great introduction and background about this free app. Robinhood, as you explained, it's a free trading platform that attracted a lot of people to start using and investing it. And multiple people like economists and some journalists and some people and some attorneys started to investigate what happened with Robinhood. How did they grow that fast? How do they have that huge day traders on their app that do all these trades? And what happened, according to analysis of industry data and legal filings, as well as interviews with even employees that work at Robinhood, they say that the app was built on what appears to be a Silicon Valley playbook of behavior nudge and push notification. And that was used to draw investors towards risky trading, which happens to make Robinhood a lot of money in the process. And while it's working on the first 3 months of 2020, Robinhood customers traded 9 times as many shares U-Trade customer did, and 40 times what Charles Schwab customers did. And they also bought and sold 88 times as many risky options contracts as Schwab's customers relative to the average account size. They say that's led customer to making decisions which are not in their own best interest, but instead in the best interest of Robinhood, which benefits from the excess trading. Others are also concerned that Robinhood is not doing enough to customers against the risk of investments. So they literally just started that platform and started doing a great marketing. I even heard about Robinhood through my brother. He said, I want to refer you so me and you can get a free stock. So if he invited me to that application, me and him can get a free stock. And they said it might be an Apple stock. Sometimes, well, the one I got was only $3.17 probably, but they advertised that you might get a Tesla stock or an Apple, but I still did not hear that someone got it. So the question then become, has Robinhood taken this slightly too far and made it slightly too fun in gambling for people that they're using it while they're staying home with this pandemic? Well, while the behavioral finance, we looked at one article that was written by behavioral finance professors, Brad Barber and Odin, whatever names. The name of that article was the behavioral finance literature with their November 2020 study, and they said attention due to trading and returns from Robinhood users. So in their study, they saw that Robinhood as a platform that included features to make investing feel more like a game, such as getting a free stock through an image that looks like scratch off lottery. And they say that's more likely to attract new unsophisticated investor who have no prior experience. As Ryder shared in a bit, that half of them, they don't even know what they're doing. They're just in there because they heard about it and they say, hey, you can make money through this. So what Robinhood really did, they targeted demographics between the ages of 8 and 35. They want to learn as much as they can about personal finance, and it's up to you to make it accessible as possible to a demographic that otherwise might not ordinarily be interested in investing. So Robinhood followed the same path because that's what they needed to do and had to make investing fun. If they wanted to grow their platform and they had to push the limits and rush out some features when they're competing with multi-billion-dollar companies or corporations, so they had to do this. They had to advertise themselves. They had to just let everyone hear about it and use the app so they can do money, even if it's a free trade commissions. So lately, it started to feel more like casinos and gambling than a stock trading platform. And Robinhood seems to be at the center of it now. People just want to be left alone, and they think that if they lose money, that's their own fault. I just have a platform. You bought the stock, you bought the option, and you lost your money. But the SEC have determined, SEC have determined that it's their responsibility to stop in to protect people against themselves, to aware them about the risks associated with Robinhood. There's a couple things that Robinhood focused on to attract more investors and more people who don't know what they're doing. So they had the top 20 movers stocks on their app where you can see what are the most 20 stocks or that been moving up and down to encourage investors to buy a limited selection of stocks based on past performance, while the simplification of information leads investors to rely more on their intuition than on critical thinking. So they're not thinking what they're doing. They're just opening an app. Oh, this stock just dropped 30%. Let's put our money in it. So it was tough. More surprising, it was found that the average Robinhood investor had just 3 stocks, which suggests a lack of diversification and overconfidence, which would lead to an lower return. They even went so far as to say that sophisticated investor would be able to exploit patterns with Robinhood platform to short stock, which experience a run up based on Robinhood's recommendation. Gambling and investors have always had plenty in common. He noted in that article, they often draw young men who exhibit self-destructive behaviors and take their ambition too far. So affecting people behaviors, trying to attract more customer and look like a game and gambling helped Robinhood a lot to grow in the last year or two. So that was not the only reason why Robinhood was in the news and the articles. There was a lot of hiccups that happened throughout, hiccups and glitches that happened throughout the growing process of Robinhood. So for me, it feels like they were not ready when they launched it. They just started this app. Let's start making money. Let's try to get as much day traders and customers in, and we'll fix it over the years. So some of the growing pains that they had in 2018, when they attempted to launch a checking and saving account, they're trying to ask people to put all their money in their account as a checking and a saving account. So it's easy accessible to trades, so they can invest in it on the spot. But account within the app, but there was a problem technically. They were not a bank and they couldn't offer the insurance for both the accounts and the investments accounts, and not checking, they couldn't support that by having a checking and saving account. So Robinhood has, so after a whole bunch of confusion and public back and forth, they just canceled the idea. That was in 2018. Then in 2019, users of Reddit's Wall Street bets, they discovered an unusual glitch in the system that allowed for unlimited margin trading loop, while some users racked up over millions over this situation. So again, that shows you that they were not pretty sure about, they had an idea. They had every new business needs to have a new value, add new value. They had this, but they still were not ready to launch that application. And finally, in 2020, early March, which is probably when most of the problems with Robinhood started, the big problems started to happen, which is right before COVID started. Just as the stock market was plummeting due to the pandemic, Robinhood experienced a system-wide outage, meaning that users of the platform were not able to buy or exit their positions until the problem was fixed almost 2 days later. And that's very bad. An option is you buy a stock hoping that it goes down or goes down. You choose whether you think it's going to go up or down, and you choose when you need that option to end. So having a 2 weeks limit for your option to decide whether you want to sell it or not. So having 2 days out of this that you can't trade is a big deal for investors. But maybe some of those new customers, they don't even know what they're doing. So their system that didn't properly account for the leap year, but a more reason was it was just a really busy time for the market. $1.1 trillion had just bought in Robinhood. So they're just saying the system could not handle this big capacity of money coming in. This shows two things: that they really did a great job marketing their app when people was at home doing nothing, and they made it look like a fun gambling app that attracted people who are there not to invest and make financial decisions, but they're there to gamble and make some money. So we're gonna move into the big case that we have, and I'm headed give this to Ryder to keep going.
Okay, good, man. That was really that's some interesting stuff, Jamil. And it's quite the thing. We're really starting to, if you haven't noticed by now, we're really starting to get into some kind of nuts and bolts of what was going on with Robinhood. And you know, we listed on the slide a couple slides back, but you've probably heard of this kind of GameStop situation, right? So that's kind of at the center of the ethical controversy that we're going to be looking at. We're going to be zoning in on and around. So sort of just to break into that, let's kind of look at that. So you know, Jamil mentioned, you know, the gambling. We talked about the tax consequences. We talked about, you know, sort of people not knowing what they're doing. And so let's look at what happened with that GameStop. Okay, that's what we really want to kind of look at right now, because that was a really big deal in the news. So there was this situation, as Jamil said, in which day traders and hedge fund managers ended up going head to head. So what's a hedge fund manager? I'll tell you this. Everybody hates them, okay? Probably partly because they're like these billionaires, right? And it's kind of easy to hate billionaires. People are starting to hate the Kansas City Chiefs because they're awesome, right? And they're successful, right? So that's a lot of people just kind of hate billionaires for a lot of things that they do, and we'll get into that more. But But hedge fund managers, what they do is they use leverage, okay, to boost their returns. This means they borrow money and then they use that money. So they might have investors who let them borrow money or borrow money from other places. They use those proceeds to and make other investments. So basically what they're trying to do is they're trying to borrow. They're using this kind of economies of scale mentality where they've got so much money, they can just kind of push people around with their money. It's kind of like a poker player. If you've ever heard the term power of the stack, somebody's got a big stack of chips in front of them and they're making bets. Well, if somebody's got a small chips and the person with the big stack, they can, call all in or do this or that. And then the person with the small stack is like, oh no, I can't really, because they've got this big stack of money and everybody, you've got this huge amount of kind of power within the market. Well, they use all this money and then they buy and sell and other things like this, commodities and all these things. Well, so that's kind of hedge fund managers. They do all this through leverage and things like this. Well, they need to pay interest on the money that they borrow. That's going to be important, right? So if they borrow money, they're going to pay interest on it. But if they only borrow it like 3%, then they make 10% interest, they make 7% on the spread, they're doing great. So this is kind of what they do, but they do it at an extremely high volume and they make a lot of money. So hedge fund managers is one important term. Let's also, you've maybe heard of the short squeeze that was put on the hedge fund managers. Well, let's talk about shorting stocks. What's it mean to short a stock? You'll remember from Dr. Truitt's class that we talked about shorting stocks, and we talked about puts, and we talked about calls, and we talked about options and naked calls and things like this. Well, shorting stocks it's really what kind of gets the hedge fund managers in trouble here, because with the GameStop situation in particular. It basically, when you short a stock, it means that the hedge fund managers are betting that the stock price is going to go down. Okay. It's risky because generally the stock market goes up, but so they're looking at the short term. So for instance, just a really simple example, if you short a stock that's valued at $100 and it goes down to $80, you make $20 on that share. Okay. It's the opposite of conventional investing where you would have a normal stock that if you have it's valued at $100 and it goes up $20, then you have $120 or something like this. So it's kind of the opposite of conventional investing. So we're going to look at this and we're going to look at kind of two sides or two arguments of this, two arguments to really grab hold of the understanding of this idea. So Jamil is going to talk about these day traders, all right, these kind of DIY investors who used Robinhood, all right, so that's the point here. These day traders used Robinhood to buy GameStop stock, okay, that the hedge fund managers had a short position on, okay? So they had a short position on this stock, so meaning if the price of this stock went up, the hedge fund managers were going to lose money exponentially as the stock went up. So I think, is that a good enough setup for you, Jamil, that you can jump in? Okay, so we'll go and here it is. There they are, the day traders. We've got them kind of coming against each other. We got day traders on one side, this army of kind of DIYers, and then the hedge fund managers, the billionaires that everyone loves to hate. So here's Jamil with the day traders.
So what really happened is, as Ryder explains, those hedge funds, they borrow money to invest it, and day traders have their own money that they invest on that app. Okay. So by the time before this happens, people are at their home. They just, they're armed with the stimulus checks. They have money that they don't know what they want to do with. They can't, as we said, it was lockdowns. People are staying home. They can't go out. And this helped or attracted more people to get into Robinhood just to explore what it is and just to get into it and put money in it. So some people thought that the GameStop option is gonna go up because it's lockdowns and people are gonna stay home and start playing games and all that. So the day traders just started putting money into the GameStop option, hoping that it goes up. At the same time, hedge funds were shorting sales on the GameStop, trying to drop that price so they can make money out of it. So, but what really happened is GameStop's shares were already sold short in excess. thus putting a downward pressure on the stock that suggested an almost certain conviction it's a forecast decline. So due to the problems with adaptation of the firm, they just found that the GameStop share opened even higher in pre-market trading. However, at approximately 8 a.m. EST time, Robinhood dislisted GameStop, AMC, BlackBerry, and Nokia, couple companies, from its trading platform. And they, even before they dislisted, they did not allow anyone to do any trades on these stocks. So they created restriction where users could no longer open new positions or even exit positions that they bought earlier. There were other ebbs and flows in the price thereafter, which the major broker Robinhood sought to control. According to the social media website, many traders were just filing complaints to the SEC, the Securities and Exchange Commission, saying that this happened on purpose. Robinhood took the GameStop option out of the list, and they did not let us finish our trades because they were trying to save the hedge funds from losing these billions of dollars on the GameStop option. So for me as a day trader, I couldn't cash out my profit on a stock that I bought fairly because Robinhood was trying to help the hedge funds to minimize their losses. So that's exactly what happened. We have two sides: hedge funds who invested his money. We have day traders who also invested his money. Hedge funds were forecasting that the stock gonna drop. Day traders were forecasting the stock gonna go up. What happened is the stock went up, which means hedge funds are losing money. The traders are making money. So they just said, Robinhood, let's take it out of the list, and we don't want to have more sales of those options or short excess. So that is the what really happened from the perspective of the day traders.
Okay, yeah, and that, I think that's a good kind of perspective there. A lot of people try to kind of explain this. Okay, well, I'm gonna have to move this. I'm gonna move our picture just for a moment here.
Sure.
Okay, so Jamil kind of makes it sound like the day traders were the ones kind of getting the raw end of the deal here, right? And so I'm going to kind of argue for the position that it was actually the billionaire hedge fund people that were sort of getting, they were being kind of accosted and unnecessarily tormented here. But I have a couple of little memes up here and things like this. It was burning up the internet, okay, because of and it really had more to do with kind of the populist movement behind this thing. Because as Jamil said, you've got these day traders, okay, who are just driving the price of this GameStop stock up. And these billionaires, I could quit calling them that, I guess, these hedge fund managers who are trying to run a business. And you've basically got, their argument is that for no reason, these people are trying to kind of torment the billionaires. So you've got one of these, you can say, the saying was GameStop to the moon, okay? GameStop to the moon, because as long as, and I can explain this more later, but as long as those DIY investors held their position in GameStop, there was no way for these hedge fund managers to buy those back and to kind of pay off that interest and pay off the money that they owed, because they were anticipating that price was going to go down. So if that price had gone down to like $1, they would have been able to make it started at $17 or whatever. If it went down to $1, they'd be able to sell them and make back and buy back. And if it goes down to $1, they sell it back for $17, then they make a $16 profit on each one of these, right? Well, it's dangerous because in a short position, you have the opportunity for unlimited loss, okay? In a long position, you have limited loss, right? Only the amount that you put in is the amount you can lose. If you put in $100, right, and that stock goes down to zero, well, you've lost $100. But that's in a normal stock position. Well, in a short position, it's much different than that, because the loss, it doesn't stop at zero. It just can keep going negative into infinity, into negative infinity. So there are all these memes, and this little guy on here with the yellow hair, that guy represented the Wall Street bets message board. So they were really kind of sticking it to the man. And the hedge fund people weren't liking this. And so some people, I like this meme that they put up here that said, let's dumb this down for you apes, because a lot of people were asking, like, what's a short position? What's a short squeeze? What's a short sale? I think this really explains it very well. It says, let's say 5 bananas currently cost $10. One ape on the market has 5 bananas. The snake asks to borrow 5 bananas for a bit, and instead sells the bananas thinking the price will go down, shorting the stock. Okay, so that was the hedge funds. The hedge funds were the snake. I think there's probably a reason for that. So they think the price is going to go down. So they're just going to borrow these bananas. They're going to sell them because the price is going to go down, and then they'll buy them back. Well, after the price has gone down to really low, they'll buy them back, and then they'll return them and make a profit kind of on the backside. All right. So the profit they make is the difference. Well, the group of apes, which is the Reddit investors, the DIYers, the people on Robinhood, they notice what the stupid snakes are doing and decide to buy all the bananas on the market, all the GameStop stock on the market, until the snakes have no other choice than to buy from the group of apes in order to return what they borrowed. If a group of apes stay strong, then the prices will go up. So this is why you saw all these memes. I remember I saw a Braveheart meme, and they're all kind of standing in the line. And I think we'll remember that scene from Braveheart where they're just waiting, and he's going, "Hold, brothers, hold, brother." And so everybody was saying they're just going to keep holding this GameStop stock. And as long as you keep holding it, their profit was going way up, and it was insane. If you own GameStop stock and you had bought in early on, even kind of midway while it was going up, people were investing these stimulus checks and making hundreds of thousands of dollars because this thing was going up so much, and they were putting so much upward pressure on this price of the stock. Well, as that went up and their profits were going up and up and up, these hedge funds, they needed to be able to buy those things back, and they were getting desperate. And so anytime it was you were kind of looked down on if you were one of these investors that was selling out and you were cashing out. So if you had made $200,000 and you cashed out and you sold, well, the people buying those were going to be the hedge funds. So you were actually kind of helping them get out of their pickle. So again, this populist thing, and they were trying to get out of it. GameStop, I mean, there was one day where GameStop short sellers lost $1.6 billion in a single day because these traders were just tormenting them. There's another old saying we say here in Southwest Missouri. It says, you never know exactly how you smell until you put your shirt on inside out, right? And so I like to say that, I like to point out that it wasn't really the DIY investors that were getting treated poorly here, but it was these hedge fund managers. They're in there just trying to run a business.
Wait, what?
No, Jamil, I'm just saying, like, the ethical problem was that the GameStop people on the Robinhood app were just tormenting people for no reason. And
No, I don't agree with you. What we did was right. What you guys did was not ethical. What happened is you guys have all the money. You guys forecasted that this stock is gonna go down, and let's make some money of those idiots because they don't know the market. It's gonna drop down. Let's borrow them the money, give them the money. When the option goes down, we make money and they lose money. I lost $17 because of you, because you called Robinhood and asked them, hey, please limit trades. Please send an error message to those day traders saying, sorry, we cannot fulfill your orders at this spot. So you think that my $17 worth nothing for your $1.6 billion?
Jamil. You're talking about $17? You're talking about $17?
I am talking about the whole idea, not the money. For you guys, money is not everything. Money is the only thing, and that's the problem, I think.
Well, I mean, maybe that's the problem, Jamil, but we're trying to run a business over here, and they've got pressure being put on them. You're talking about $17. We're talking about $1.6 billion, and we've got people who are trying to run a business here, and all you have a bunch of this goofballs sitting around in their mom's basement trading on their computers and just tormenting professionals for no reason. That's absurd.
I think you guys need to go and read this book because you guys don't know what business. You guys are trying
you gotta
to
be
make
kidding me.
You guys are trying to make money on our shoulders because we don't know what market is. You guys know the market, but what happened with COVID was the opposite of what you guys forecasted. We were trying to make money, and we was going to make money until you guys pressured Robinhood to not let us make money. So
Jamil.
I lost, but you minimized your losses because of Robinhood.
Hey, that just because we leveraged our, or possibly leveraged, I'm not confessing to anything here, our relationship with Robinhood. Listen, you need to read this. You see the title of this bad boy? That is the only social responsibility of a person, of a company, is to maximize shareholder wealth. That's Milton Friedman, buddy. Try.
I think.
Okay. We are trying to maximize shareholder wealth.
You need to retake this class if you think Okay, so let's go back to where we ended with Ryder. This was really good to explain what really happened, the issue that happened between the day traders, Robinhood, and the hedge funds. So we've went through the observations. Then we went through the understanding of what happened. And I hope this skit helped you a little bit to understand what happened. And we've talked about a couple points where we just tried to understand what's going on, to analyze that dilemma and see what is the right thing to do. Did they do the right thing or not? So we've talked about several points. Ryder did talk about it, tax implication, the issues that happened, gambling addictions that we talked about, behavior manipulation, and again, we ended with the GameStop situation. So we're not focusing on how Robinhood used tools to make their app more fun, more gamey, more gambling stuff. We're not going to focus on how they affect the behavior. Our issue in this presentation is the GameStop situation, the one we skidded about, we talked about.
Yeah, and I agree. I think in these, it's good to bring up these other things just for the sake of understanding, right? But all of this being said, you're right. When we try to figure out what kind of issue we're dealing with, we've got a lot of issues swirling about here, right? As you mentioned, but we're trying to kind of tackle this, Robin. What was it right? What they did, and kind of moving to that, like their decision, right? It was a complicated decision that they had to make because, and this is the decision, we kind of referenced it, but the decision that Robinhood made, okay, with all this swirling about, they had hedge fund, the more that GameStop would keep buying up these stocks, okay, the more hedge fund managers were losing money and losing billions of dollars. Well, if they could be stopped, if you think about from the hedge fund perspective, if the traders could be stopped from buying more stock, then their losses, they could limit their losses and they could thing and move on to fight another day. And so that's the dilemma we're facing. That's the issue we're looking at. That's the decision that we're honing in on is it right, okay, for Robinhood to assist these hedge fund managers and infringe on the rights of these GameStop investors by shutting down their app? That is our question, or that is our decision. So it's multifaceted, it's complicated, but decisions have to be made. So say what you will then on that, Jamil.
Yes. Well, again, the main ethical decision we want to discuss here is, was it right for Robinhood to limit trading activity? Was it something that they did on purpose, or was it just, as some of them said, that it was just an error in the system that people couldn't exit of their options? So the whole world started noticing that Robinhood was limiting the transactions. Even Ted Cruz totally agreed with the AOS that it was unacceptable. Several centrist and leftist Americans leaders condemned the subsequent complaints from the hedge funders as large problem. They accused hedge funds who have granted a notorious reputation for market manipulation and cold-blooded financial, and yet they had to go to complain about those actions in public activism. So even the Senator Elizabeth Warren noted that hedge funds, she literally said, have treated the stock market like their own personal casino while everyone else pays the price. Representative, as you can see in the picture, multiple people were commenting and tweeting about the issue, and they were not happy about it. So that gonna take us to the a little surprise that we're doing for you guys here to just kind of explain in a better way what really happened.
Yeah, so we've kind of given sort of a technical explanation, right, of what happened. We've kind of said, and to kind of bring it down, these were a bunch of tweets and memes, and you've got Ben Shapiro out here saying that Robinhood should not be stopping the trading of GameStop because it's infringing on the free markets. As Jamil pointed out, AOC and Ted Cruz agreeing is not something I've ever seen before or plan on ever seeing again. But they're saying that there's an ethical issue here that needs to be dealt with. So we're gonna do a little skit here, okay? And this is going to be, I'm gonna set it up for you. This is this is a Robinhood. It's actually happening. It's a Robinhood help desk call during the time, okay, that Robinhood decided to shut down trading. And
that's the phone ringing, by the way, if you guys didn't know. These Robinhood people are not answering the phone.
Oh man, great day at Robinhood. Oh yeah. Oh, yeah. Call coming in. Hello, Robinhood help desk.
Hello, my name is a day trader, and I'm having some issues with your app. Could you please help me?
Did you say day trader? I'm putting out tunnel. I'm going through a tunnel. I can't go. Call must be dropping.
Hello? You're kidding me. They just hanged up on me. Okay, I know how to trick this guy.
That was close. Oh no, calling again. He is calling again. Okay. Hello, Robin desk.
Hello, my name is the hedge fund. How are you, sir?
Hello, Mr. Hedge Fund. I was hoping you would call. I was seeing how you were doing. I wanted to make sure that we were looking after your interests. Really.
Well, I actually appreciate you guys for limiting the trading and stopping that stock because we were going to lose a lot of money, even way more than what we lost. So I appreciate the relationship we have. We want to keep it going up. We'll support you guys. And you know what? It's not me, the hedge fund. It's me, the day trader. I just used to know that I know. Okay, it's me, and if you guys can't do this, okay, you can't do it.
Okay. I'm sorry, Mr. Day Trader. I'm sorry. Listen, I thought I was talking to the hedge fund. I mean, I didn't know who I.
Oh yeah. I can tell. I just want to let you. I recorded this.
Oh, hang on. Bloop. I'm sorry. I'm getting another call here. Let me just switch over real quick.
This guy is playing me. I'm gonna call last time.
Oh man, hey, what's up? Hedge fund buddy? I'll tell you what. I got this GameStop idiot DIY investor using Robinhood on the other line. This guy is a buffoon. I'm telling you, he's just this guy that came in and he's, half of these people have never even invested before. But you are my hedge fund buddy. And I'm just, I'm really happy. Oh, wait a minute. Is hedge fund, but is that you or am I? Hello? Who am I talking to?
Hello? Hello?
Oh.
I need my $17 back, please.
Oh no, I'm sorry. I thought I was on the phone with someone else. Hey, listen, GameStop buddy. Here's the thing. I'm just going to shoot you straight here, pal. Nobody particularly cares about you. You're you're just kind of a DIYer, and really I got bigger fish to fry. So I'll just I got to go. I got to play some golf and buy some other stuff and do some other stuff in my application. So I'll talk to you later. Boop.
I think that was good, man. That was really good. So
that was a beauty. That, you know, and I'll tell you this, Jamil and I don't even have professional training, acting training. So our point there was to really show you how these people at Robinhood, we really feel like they took the side of the hedge fund investors, and that was just really kind of not the.
And by the way, don't try to call Robinhood. They don't have a customer service number.
Oh yeah, they don't actually
complaining tickets through the app. So
that's right. They don't have that. So we'll move on to the next one. And let's consider really the action of this all of kind of this, and let's try to sort of apply this to kind of our ethical framework, and I think kind of see how they made this decision and what actually they did. So what were their choices here? Okay, the good thing is we've got a bunch of tools, right? And through being in this class, we've got a bunch of tools. We've got a bunch of frameworks. You know, for instance, we got Hosmer, we got Milton Friedman's ethic, we've got Just Business. So we're making this decision now. Who are they going to be? Their ultimate question on Robinhood is, who are they going to be loyal to in this particular situation, right? To whom do they owe loyalty? And you know, there's really three choices, probably more like two choices, but they can be loyal to their customers, right? The users of their app, and they can not limit trading. They can just do what they said they're going to do. They can be loyal to these hedge funds because there's pressure put on them from we don't really know where, but there was pressure put on Robinhood to limit trade. It was nothing like this had been done. A lot of people consider it, even like I said, from both sides of the political aisle, they considered this to be a form of market manipulation. There's investigations going on. And then the third one we put is loyalty to no man, right? They just try to conduct business in a moral fashion. And you know, as those decisions come, they kind of make those decisions. So,
yeah. So I want to just say a little bit here before we wrap up and end this presentation that Robinhood was faced with two options. Do I need to support my customers, or do I need to be on the hedge fund side? For them, as we shared, most of their customers, they're gamblers. They probably thought they're going to come back. Even if they lost money, they're going to come back somehow. I can't lose my relationship with the hedge funds. That's what we thought. From the observation and understanding what happened, we think the loyalty went to the hedge funds.
Yeah, and I think, you know, for whatever reason it was that they did that, it's kind of, the whole thing's kind of ironic because Robinhood is really Robinhood, rob from the rich, give to the poor, populist movement. And really once the kind of right amount of money got involved and the right players got involved, they sort of caved. Those I feel like they sort of caved. They kind of left their ethics out and let sort of their reputation or the money that was involved really guide the situation. So we have a couple of questions here. You know, they honestly, there's good and bad things about Robinhood. They've done a lot of good for the investing community because of you know, they provided a service that people could get involved in. Some people would argue, you know, they've made it fun and things like this. But you know, there's just some ethical implications there. And we looked at a bunch of them swirled around and then zoned in on this one with GameStop, but we'll leave these here. We're kind of running out of time. So we'll kind of, I think these would be good to talk about in class, of basically evaluating these things using different kind of frameworks. I think if we think through those things, what frameworks can we apply? You know, I think asking the question, I think it bears looking at, was it ethical for these GameStop, these Robinhood investors to just drive the price of the stock up for the purpose of tormenting these hedge fund people? You know, is it ethical for these hedge fund people to drive down the price of the stock? After all, that stock, there's underlying there's underlying assets. GameStop is a business. It's got employees. They've got people that need to pay their bills, and you're essentially driving them out of business by driving down the price of their stock. And so, there's a lot that goes on to that. And then ultimately, Robinhood, and their involvement, that's kind of the question we looked at. Was what they did ethical? So, and then reflecting, I think we'll discuss these in class. I think that's good. Jamil, did you have any closing thoughts?
Because before we close, I just want to say that Robinhood has done a lot of good for the entire investing community. They invented a new app that was engaged new audience who had new ideas of investing, and it was fun for some. But I think investor could almost get near instant access to leverage money through it. This led to a big problem, to an ethical problem with Robinhood. And I think when me and you talked about how can we apply the Hills idea or about it, it's for them, money is not everything. Money is the only thing. And I can't see where those people can have the holiness just in love in what they do. They care about we're gonna probably watch the presentation of what business is for. And as Charles Handy said, that we're living in a capitalism life where people only care about themselves and how to gain returns to themselves only. So I think that's what I have. And probably we have the references.
Yeah, the references. I got to get out of here. I actually need to help Dr. Petticord. I need to help her load some boxes here down and help her to get ready for her move. I know you're going to meet me over there to kind of help get things
let's do it.
Cleaned up and everything. So we got to get out of here and get on that.
Okay, well, thank you guys for watching. I hope you enjoyed the presentation. We'll discuss this probably in class tomorrow and see what you guys think about it.
Sounds good. Appreciate it, Jamil. Thanks, everyone.